Hey everyone, this is James at Eurevo, New York's #1 commission rebate brokerage, coming to you with our April 2022 Manhattan market update. And we're finally starting to see tangible signs that higher rates are starting to impact demand. If we look at the number of contracts that were signed in April, we were down 12% year over year. And you can compare that to earlier in the year where we were basically just tracking last year's levels, which was a record level of demand. So it's not like this April was weak by any stretch, but it was a noticeable deceleration, which happened to coincide with much higher rates. So probably not much of a surprise there. And if you remember going back over the last year or so, the high end had seemed impervious to any slowdown. It just kept getting stronger and stronger. But across the board, price point wise, we're seeing declines. So even at the high end, this $2 to $5 million bucket, we were down 8% year over year. And then when we look at the inventory side, it was actually a fairly normal April compared to March. We saw about a 9% increase in the number of listings that were available at month end in April compared to month end in March. But the year over year declines are starting to narrow. We were down 14% compared to last year. And you can see, comparing this salmon color line to the blue line, the gap between this year and last year has been narrowing. So basically, we have inventory going up in a way, while contract activity, while demand is going down. So what this means is the market is shifting from a seller's market, not necessarily to a buyer's market, but it's not as strong a seller's market as we have been seeing for the last year or so. And we'll get to that in a second, but just focusing on the inventory by price point, also going back to declines across the board, you can see it's a little interesting that the sharpest upticks in supply were actually at the higher end. So the $2 to $5 million range and the $1 to $2 million range saw the sharpest upticks, the largest increases on a month-to-month basis. So maybe that sellers finally registering the news that the high end of the market was so strong, putting their properties on the market, trying to capitalize, which might be a little too late. But the high end is seeing more inventory come on than the lower end. And then going back to pricing and mortgage rates, we're expecting pricing to stabilize here. I don't know if it'll actually go down, but when you look at mortgage rates, it would be foolish to think that the market was just going to steamroll ahead with the momentum that it had earlier in the year. And that's simply because mortgage rates have basically gone from 3% entering the year to 5% now. And when you look at what that does to a mortgage payment, it increases at 27%, going from 3% to 5% is a 27% increase in the mortgage payment. So whether pricing is actually going to go down or not remains to be seen, but certainly with mortgage payments up that much, we're not going to see as much upward pressure on pricing because the affordability metrics have just gotten so less affordable, not necessarily unaffordable, but less affordable. So this is what we're watching going forward. We have seen that we're seeing it in the numbers. We're seeing it in our operations as well. We've seen buyers lower their budgets. We've seen them put their search on hold, just as they digest higher rates, if they can afford it, if they want to spend that much. So the next couple months are going to be interesting to see what happens with supply, and then perhaps more importantly, what happens with contract activity. So let us know if we can help out. Obviously, we would love to work with you on your search. We'd be happy to slice these numbers and focus specifically on the submarkets, price points, property types that you're interested in. And we'd be happy to get you a commission rebate for up to 2% off the purchase price on any place in New York City. So you can reach out to us at info@eurevo.com, and we'll see you next month. Thanks a lot. Bye.